Best investment options in 2023. Number 1. Stock market. The stock market is a marketplace where shares of publicly traded companies are bought and sold. It is a mechanism for companies to raise capital by selling shares of their ownership to the public, and for investors to buy ownership stakes in those companies. The stock market provides a platform for investors to buy and sell shares of companies with the expectation of making a profit by selling them at a higher price than they bought them. The value of a company's stock is influenced by many factors, including the performance of the company, economic conditions, and investor sentiment. The stock market can be accessed by individuals through brokerage firms, which act as intermediaries between investors and the stock exchange. Number 2. Bonds. Bonds are a type of investment that involve lending money to an entity, such as a corporation or government, in exchange for a fixed rate of interest over a specified period of time. When an investor buys a bond, they are essentially providing a loan to the issuer of the bond, and the issuer agrees to pay the investor a certain amount of interest at regular intervals until the bond matures. At maturity, the issuer repays the principal amount of the bond to the investor. Bond prices can fluctuate based on a variety of factors, including changes in interest rates, credit risk, and market conditions. Bonds are generally considered to be less risky than stocks, as they offer a fixed rate of return and are typically less volatile. However, they may also provide lower returns than stocks over the long term. Bonds can be purchased individually or as part of a bond fund, which is a collection of bonds managed by a professional investment manager. Number 3. Real estate. Real estate refers to property consisting of land in the buildings, structures, and natural resources, such as water, minerals, and crops, attached to it. It includes both residential and commercial properties, such as houses, apartments, office buildings, retail spaces, and warehouses. Real estate is a significant asset class that can be bought, sold, and rented out for various purposes, such as investment, residence, or business operations. Real estate transactions typically involve a considerable amount of money and often require the services of real estate agents, attorneys, and other professionals. In addition to physical property, real estate also encompasses rights and interests associated with land and buildings, such as easements, liens, and leases. Real estate can be a complex and dynamic industry that is influenced by various factors, including economic conditions, demographics, and government policies. Number 4. Index funds. An index fund is a type of mutual fund or exchange-traded fund, ETF, that tracks a specific market index, such as the S&P 500 or the Nasdaq. The goal of an index fund is to replicate the performance of the underlying index it tracks. Index funds are passive investment vehicles, meaning that they do not rely on active management by a portfolio manager to select individual stocks or make investment decisions. Instead, they seek to replicate the performance of a broad market index by holding a diversified portfolio of securities that mirrors the composition of the index. Because index funds do not require active management, they tend to have lower fees and expenses compared to actively managed funds. They also offer investors exposure to a broad market index, which can help to reduce risk through diversification. Overall, index funds have become increasingly popular among investors as a low-cost, low-maintenance way to invest in the stock market.
Number 5. Mutual funds. Mutual funds are investment vehicles that pool money from a large number of investors to invest in a diversified portfolio of stocks, bonds, and other securities. When you invest in a mutual fund, you own a portion of the fund's assets, and your returns are based on the fund's overall performance. Mutual funds are managed by professional fund managers, who use the money pooled from investors to buy and sell securities according to the fund's investment objectives. Mutual funds can be actively managed or passively managed. Actively managed funds have fund managers who actively choose the stocks, bonds, or other securities to buy and sell in the fund's portfolio. Passively managed funds, on the other hand, seek to track the performance of a market index or benchmark. Mutual funds are a popular investment option for individuals because they offer a convenient way to invest in a diversified portfolio of securities, even with small amounts of money. Number 6. Exchange-traded funds. Exchange-traded funds, ETFs, are investment funds that are traded on stock exchanges, just like individual stocks. ETFs are designed to track the performance of a specific index, such as the S&P 500 or Nasdaq. They can also track a specific sector, commodity, or currency. ETFs are similar to mutual funds, but they are traded like stocks. They offer investors the diversification of a mutual fund with the flexibility of trading on an exchange. ETFs can be bought and sold throughout the trading day, just like stocks. ETFs are generally low-cost investments, and they offer investors the ability to invest in a wide range of assets with a single investment. They also provide exposure to specific markets or sectors without the need for investors to research and purchase individual stocks or commodities. Number 7. Certificate of Deposit. A certificate of deposit, CD, is a savings product that earns interest on a lump sum for a fixed period of time. CDs differ from savings accounts because the money must remain untouched for the entirety of their term or risk penalty fees or lost interest. CDs usually have higher interest rates than savings accounts as an incentive for lost liquidity. These are the 7 best investment options in 2023. Remember, before investing in any investment option, it's essential to conduct thorough research, analyze your financial goals, and assess your risk tolerance. Additionally, it's always best to seek professional financial advice before making any significant investment decisions. Subscribe for more information. Thank you.